Welcome to Get Rich Education. I'm your host, Keith Weinhold. The legendary and incomparable business mogul and investor Jim Rogers joins us from Singapore today to discuss the economy, interest rates, both residential and agricultural real estate, whether we should expect inflation or deflation in the future, and more on Get Rich Education. MC Lobsher is the host of the Cashflow Ninja podcast and president of Producers Wealth. He is on a mission to help you achieve financial independence and freedom as soon as possible. He achieves this by integrating the infinite banking concept with real estate investments to increase your returns and recapture cash flow that you are not even aware of that you're losing. MC shares the number one strategy of investors in his holistic wealth creation course at yourownbankingsystem.com.
Would you like to know the easiest way to create wealth and passive income with real estate? This is Marco Santarelli with Norada Real Estate Investments. Now you can access the best deals without the stress or hassle of having to find, renovate, or manage those properties. We save you time by providing you with passive income investment properties in some of the best U.S. markets. Learn more by downloading your free copy of The Ultimate Guide to Passive Real Estate Investing. There's no obligation and nothing to buy. Simply visit passiverealestateguide.com and get your free copy today. That's passiverealestateguide.com.
You're listening to the show that has created more financial freedom than nearly any show in the world. This is Get Rich Education.
Welcome to GRE, from Cambridge, England to Cambridge, Massachusetts, and across 188 nations worldwide, navigating you toward financial freedom. I'm Keith Weinhold. You're listening to Get Rich Education. There are a few business and investing moguls in the world, sought-after financial commentators where people seem to cling on their every word, like T. Boone Pickens, Warren Buffett, Jim Rogers, George Soros. Well, we're fortunate to have one of them with us today as the illustrious Jim Rogers joins us. And it's good to bring in a voice every once in a while that's a generation my senior, or in this case, maybe 2 generations older than me, and listen in on that life experience. Really, it's deeper than you gaining long-term investor perspective here. More importantly, you get some insight on how to become a productive person in this world. That's ultimately what you strive to do. Sooner or later, the dollars that you generate for yourself in this life are really a byproduct of the value and productivity that you will create in the world first. Jim Rogers is the chairman of Rogers Holdings and Beeline Interests. He was the co-founder of the Quantum Fund and Soros Fund Management. He is also the creator of the Rogers International Commodities Index. Yes, his own commodities index. In fact, there is also a devoted ETF, an exchange-traded fund, that was more recently developed, and it uses machine learning to analyze global economic data and trade, specifically like Jim Rogers trades, a Jim Rogers bot, if you will. It's called the Rogers Artificial Intelligence Global Macro ETF. Isn't that remarkable? Now, he is about to join us from the veranda here, so it's possible that you'll hear a breeze in the audio at times. Let's talk to Jim Rogers. I'd like to welcome our guest today, someone whom you often see on television and in major media outlets, renowned businessman, financial commentator, and legendary investor joining us from Singapore. Welcome to Get Rich Education, Mr. Jim Rogers.
I'm delighted to be here, Keith. Good morning. I guess it's good evening where you are.
Yeah, it's so good to have you. You know, Jim, it's interesting. I've heard you say that 200 years ago, London was the place to be. 100 years ago, New York City was the place to be. Today, it's Asia, which is where you're joining us from today. Tell us more about that.
Well, there's no question that the 19th century was the century of the UK. The UK was the most powerful, richest country, successful country in the 19th century, and certainly the US was the most powerful, successful country in the 20th century. Well, both of those countries hit a peak, and the UK is no longer the most powerful country in the world. The US is certainly with the largest debtor in the world history. So we do have some distinctions, but many would suggest that maybe the U.S. has peaked and is if nothing else, flattening out and maybe even starting to decline. The debt is not declining. The debt is skyrocketing, but other things maybe are declining.
Yeah, that's for sure. Another interesting thing is London and New York City, in their post peak success, have become very expensive places to live. And Asia, for the most part, isn't. There certainly are some notable exceptions like Hong Kong and Singapore, where you are.
Well, yes, there's certainly plenty of expensive places in Shanghai, Hong Kong, but even those places now have peaked and are some parts are starting to decline. So property prices in Asia are not down by any stretch of the imagination. When I say prices in Shanghai have peaked, they're still more expensive than most places in the world. But even in Asia, prices have started to peak. In London, if you go to Europe as well, you'll find that property in most European and Asian cities has peaked.
And the prices of a lot of things have peaked. The cost of assets is greater today, whether that's equities or real estate or some commodities. And now, more interestingly, just about a couple years ago, the cost of money itself has become higher with interest rates. And I think what's really interesting about interest rates, Jim, is when we take a look at a long term historic perspective, interest rates, at least in the United States, they generally rose from the 1940s up until 1981 when they peaked. From 1981 all the way to 2016, of course, with a few blips in there, they generally went down. That's for a period of 35 years. But now, since 2016, they've begun rising again. So I guess my point is we now have a new generation living in an era that's really never experienced rising interest rates and that cost of money. So just tell us what you think about effects both in society and in investors' life with potentially going into a longer term era of rising interest rates, if you think that's where we're going.
Well, I would also point out to you that the 35 years before 1981, interest rates were always rising. Interest rates hit their bottom in 1946 and then went up, 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 up. Not every day, not every year until 1981. And then they started declining. So they've had two long periods, 35 years in each case, where interest rates did nothing but go up and now nothing but go down. So interest rates, at least in America, have a history of long cycles. You ask me, we're now headed up again, and interest rates are going to go much, much, much higher over the next few decades, and it's going to ruin a lot of people. I hope none of your listeners get ruined. I hope I don't get ruined, but rising interest rates are here for a long time, Keith. Be worried. Be careful.
Okay, so this is not a shorter term blip in your opinion. So with that knowledge, then what is the best way for a person to position themselves, especially here since we're talking to real estate investors, people that often have the ability to tie up long-term fixed interest rate debt and get leverage?
If you can borrow a lot of money for a long period of time at low interest rates, rush out and do it right now. Because as I just said, interest rates are going to be going higher for a long period of time, and you will have a huge advantage if you can lock in rates now. Lock in. That's the important word. Lock in. Make sure you're not going to get hurt if they go higher.
Yeah, and I think it's so important to keep that historical context in mind. What's interesting, Jim, is some people think that interest rates are relatively high right now, but I think just listening to our conversation with these 35-year periods successively that we've been talking about, you can understand that real estate rates and other interest rates are historically low.
Anybody who thinks these interest rates are high needs to go back and do a little history, because these interest rates are the lowest in recorded American history. I mean, we never had interest rates this low, this long. When I say this low, back the last 4 or 5 years, this low, this long. So these are anything but high interest rates on a historic basis. And that's true everywhere in the world. I mean, Keith, interest rates were negative in some countries in the world. Japan has never had such low interest rates. Much of the world has never, ever had such low interest rates. So if you think these interest rates are high, please do some homework.
Just like when jars of pickles are cheap or an automobile is on sale, it's time to buy, and money continues to be on sale. But what's interesting is that higher interest rates often correlate with higher inflation. There's a positive correlation there. What do you think is more of a long-term phenomenon, at least in the United States, inflation versus deflation? It's so interesting that we have these push-pull factors. Basically, the United States has the ability to print money and stoke inflation. The Fed has that governor with their rate policy, and then technology is a tug toward deflation. So what do you see playing out more over the longer term, inflation or deflation?
Well, unfortunately, governments usually wind up with inflation because it's easier for governments that way. It's easier to print money, it's easier to borrow money, it's easier to spend money, and ultimately that leads to more inflation. Inflation makes people unhappy too, but governments can at least do something or think they can do something. Deflation makes everybody angry, and governments usually cannot do much except revert to inflation again, which is not good for you and it's not good for me, anybody listening to this, but politicians are more interested in themselves.
That's right. The most politically expedient thing to do is to print more dollars. It's not to raise taxes or it's not to report a high inflation rate. There's a lot of motivation toward reporting a low inflation rate. I think there's a lot potentially hidden in the United States CPI where you can make the case that inflation is higher than what's reported.
It certainly is. Everybody listening to this, just go to the grocery store. Don't send your butler to the grocery store. Go to the grocery store or the restaurants or anything yourself, and you will see that there's inflation out there.
Well, Jim, that's the thing. You know what I find so interesting is that at the consumer credit level, an everyday person might go to Chipotle and they know just a year ago they were paying $8 for their burrito, and they know today that they're paying $9 for a burrito. So they understand that inflation's there, and inflation really is this hidden tax, as I've described it before. But yet, for some reason, even though people know that inflation is there at some conscious level, they dismiss the effects of inflation when it comes to their investments. Why do you think that is?
Especially when in periods of slow inflation, people don't notice it so much. You just cited a very good example, and there are probably many other examples as well. I know there are many other examples as well, but people don't notice it as much. When inflation starts rising rapidly, then people notice it and they take action with their investments and other things as well. But certainly when inflation is here and coming back and getting stronger, Keith, interest rates are going to go higher. People have to be paid more on their money when inflation is there because the money is losing value every day.
Yeah.
And people want to compensate for that by higher interest rates.
Well, in the United States and a lot of other nations, we've had this long run and this continuous economic expansion since 2009. In fact, we are currently in the longest economic expansion on record by a lot of measures. And it just seems like it's more popular than ever this year to talk about a recession threat and to look at recession signals. So what are your thoughts? What are some of the signals that someone should be considering out there for an upcoming recession potentially? And then when do you think a recession might unfold? I know these things are very difficult to predict.
Well, we've had the longest period in American history without a problem. That doesn't mean it can't go on another 10 years, 20 years. Who knows? We don't have to have them, except we always have, and everybody in the world always has. So people who think they're not going to be economic difficulties ever again, should do some homework, should do some research, because we have always had, and when I say we, the whole world has always had economic problems, and we're going to have them again. One indicator which some people have noticed is that when short-term interest rates are higher than long-term interest rates, that has always signaled a recession is coming. In other words, if short-term interest rates are 3% and long-term interest rates are 2%, you can be pretty sure a recession is coming within a few months. But the main thing to watch for is that when you start hearing stories about people getting laid off or orders not coming in, you'll hear the stories about not as many orders before you hear people getting laid off. But just keep an eye on what's going on around you. You probably know some businesses, and when you hear people talking about, oh gosh, we don't have as many orders this year as we did last year, you can be pretty sure that something is starting to unfold.
Yeah, that is sort of a precursor, the durable goods order report toward foretelling recession. Well, in recession, asset prices oftentimes follow somewhere thereafter and they begin to deflate. We have a lot of interested real estate investors here. And something interesting, Jim, is I think real estate gets broad brushstrokes. A lot of people in major media outlets talk about real estate as if it's just one national market. And I know that's convenient to do sometimes. But we really focus here on investing in markets that tend to be in the United States, Midwest, and South that don't have this high flying capital appreciation and don't experience these deep lows in a Great Recession either. But rather, it's sort of this workforce housing that's bought more for the production of cash flow. So, just sort of with that in mind, do you see any vulnerabilities toward buying assets with those particular characteristics, where you're buying in these more stable markets, avoiding the volatile coasts, and buying in the heartland of the United States for cash flow? Any particular threats that you see there?
I'm very optimistic in the future about agriculture. Agriculture has been a disaster for a long time, and that's in the process of turning around. Many of the places you just mentioned do have agriculture in their framework. So I would certainly be optimistic about property or any kind of property in agricultural areas because they have hitting bottom and all that's going to turn around. I wouldn't want to buy property in New York City, which is a financial city, or Boston, financial city, but I would certainly like to buy property in Nebraska or Oklahoma or Iowa, places like that.
You've been quoted as saying something very interesting. You've often suggested that rather than working for Wall Street, that young people of today ought to consider agriculture or mining instead, which is something that I absolutely love. You suggested perhaps the young people of today shouldn't go work on Wall Street. Instead, they should learn to drive tractors. And, I just think that's really interesting because we're talking here about basic human needs. We're talking about housing and we're talking about food that people need to eat. So tell us more about trends in agriculture and why you think that's a smart place to be.
Throughout history, we've had long cycles in many things. We talked about interest rates before, but it's sometimes if you go back and read history or novels, you'll see that the farmers were lords of the universe. You'll also see long periods when the financial types were lords of the universe. Well, finance has been great for the last 30 or 35 years. Agriculture has been in decline. The average age of farmers in America, Keith, is now 58. In Japan, it's 66.
Gosh.
I mean, I can give you more and more statistics that more people in America study public relations than study agriculture. So agriculture has been a terrible place to be. But again, if you go back, you will find that these cycles turn and that either we're going to have better times in agriculture or we're not going to have any food and any clothes at any price. Somebody's got to produce this stuff. So I would certainly encourage people, instead of going to Wall Street, and I can give you many reasons that Wall Street is coming to an end, but I would learn about the people who produce real goods, whether that's copper or wheat or whatever it happens to be. I would learn about producing real goods now and living in those areas. I mean, if you don't want to produce corn yourself, go live in the corn area because all the people around you are going to be having a much better time. Start a restaurant, start a clothing store, do something because all of your neighbors are going to be much better off.
I want to ask you some more about agriculture in a moment, but you said something so interesting. Wall Street is coming to an end. Tell us why you think that would happen or how that might look.
Well, for many periods in history, I went to Wall Street in the 60s and it was a backwater. I can remember my professors telling me that, oh my gosh, why would you get involved with the stock market? It's not important. It's not a good place to be. And they were right. I didn't know that they were right. But that all changed as the economy got better and currency many things got better. And so Wall Street went back to being a hot, wonderful place to work and make money. And it has been for over 30 years now, probably 35 years, 36 years. And that's going to change again. It always has anyway. Again, it doesn't have to. Wall Street could be the mecca and the haven for the rest of history. Unlikely. It hasn't been in the past. But we've always had these changes. Right now, there's huge competition. I told you before that nobody studied agriculture, but thousands, tens of thousands of young people in America and worldwide are dying to get an MBA. In the 60s, there were only 5 or 6 less. I think in 1958, America issued 5,000 MBAs. Well, my goodness, there are tens, hundreds of thousands of MBAs cranked out every year now because everybody wants to go into finance, and the MBA they think is the way to get there. Well, if nothing else, there's huge competition. You also find that governments like to pass laws against the investment community now because they're not so popular. So you're having governments going the other way. You have competition going the other way. You have huge debt. There's gigantic debt in the financial community now. There was no debt 40 years ago on Wall Street. Now there's staggering amounts of debt. So the whole thing has changed. And when we have hard times again, which we will, as I said before, Wall Street's going to get it in the ear, in the neck.
Why invest in real assets much more than stocks? Why else do you think that Wall Street could be coming to an end? Is it derivative products, or is it fees, or is it decentralization of American power? Or give us more on that.
All of those are just reflections of the same thing. Derivatives didn't exist 50 years ago, or virtually didn't exist. But as Wall Street has prospered, as the financial community has prospered, people have come up with more and better ideas about how to make money and how to control things and how to use money. But that's usually a sign that we're coming to an end. When an area is despondent and nobody wants to go there, like agriculture today, for instance, you usually don't find much innovation. But when there's prosperity everywhere, all the smart people go there and innovate and come up with new products, new ideas, such as many financial derivatives now, which did not exist 50 years ago. To me, that's just another sign that the game on Wall Street is coming to an end. Don't think that I like this. I happen to love Wall Street and finance. I've spent my life there doing wonderful things. But one has to deal with facts or one will suffer very badly.
Jim, people are always trying to predict the future, especially when it comes to investing. And what a lot of people ask themselves is, what is going to change in the future? And I contend that a better question for an investor to ask themselves is, what is not going to change in the future? What is not going to change anytime soon is that people are going to need a place to live and people are going to need calories to eat. So that's agricultural real estate. Any other thoughts about agricultural real estate, whether that's particular regions of the world or things to avoid or particular commodity crops that are especially good ones to be in when it comes to agricultural real estate?
Nearly all agricultural commodities are down in price, depressed in price. You look at things like sugar. America's not a big producer of sugar, but sugar prices are down like 80% from their all-time high. It's not much that you know of in life where the price is down 80%. But to give you an example of how bad things have been and are in agriculture. So that's going to change. As I said before, it's in the process of changing now for many reasons. So just about anything, Keith. I mean, I don't think you should raise cotton in Minnesota, but depending on the weather and the soil you have, just about anything you'd go into in agriculture now is going to do well. But again, you have to worry about weather and soil. You can't just jump in blindly.
Some commodity prices are low, and of course, as savvy investors, we want to buy low, but the long-term trend is the world continues to have a higher population, while at the same time, we have less and less arable land, so that supply-demand imbalance could potentially tilt into an investor's favor. But of course, we do have climate change out there as a potential X factor when it comes to agriculture. What are your thoughts?
Well, Keith, we've always had climate change. I mean, there's nothing new about it. You can go back and look at trees, stones. Climate change has always been around. We're having it again, but that's not unusual. Some people are jumping up and down about it. But again, if you go back and study history, you'll see that there's always been climate change. And you just have to adjust and adapt. You said before, we're talking about change. I would emphasize to everybody that the only thing that is constant in life is change. Things are always changing. Everything people think today will not be true in 15 years. Keith, pick any year, 1900. Everything that people knew in 1900 was not true in 1915. Everything that people knew in 1950 was not true in 1965. That is the way the world has always been. And the main thing that you should understand is, okay, here it is, 2019. Everything that we know to be true today is not going to be true in 2034. And if you can figure out where it's going, you're going to get very, very rich. But the first thing you must know is it's not going to stay as it is now.
To my point, that's very much along the lines of think about what is not going to change in the future, because most everything is. One particular commodity that we've talked about on the show, Jim, is coffee. Coffee is the second most traded commodity in the world. And as cultures develop and get these higher end tastes, they really have more taste for these higher grade specialty sort of crops. What are your thoughts?
You're exactly right. Problem is, Keith, it's hard to grow coffee in the United States.
Yeah.
I mean, maybe in Hawaii you can grow some, but for the most part, it's not an American product, except we do consume. We're probably the largest consumer of coffee in the world. So both many ways to play. You can produce it or drink it or sell it. I drink coffee. I love espresso. I have espresso every day. And I hope I never stop because I like it so much. But figure out the best way to participate, and you too can have prosperity.
The legal drug with sustainable demand.
There's another legal drug now, and that's marijuana. Marijuana is legal in 90% of Americans can now use marijuana legally. As you know, all of Canada, many countries are making marijuana legal. So I don't have a way to play, but people should understand that because anybody who grew up thinking, oh my gosh, marijuana, horror, 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 well, that was true 15 years ago. But remember, the world is constantly changing, and some people are going to make huge fortunes in marijuana in the future.
We're talking about things that are real and necessary to human existence, like housing and food. What about fresh water? What about investing in something as necessary as fresh water?
If you can figure out good ways, because water is a staggering problem in much of the world. There are wars in the Middle East over oil. There are going to be wars in the Middle East over water as well, but not just the Middle East. Parts of America down in the Southwest, California is already developing serious water problems. The water table in much of the Southwest is starting to disappear. So yes, figure water out and you're going to be very, very, very successful and prosperous.
As some areas continue to warm and dry out, human ingenuity is going to figure it out. And I don't think the United States, for one, is going to have massive people dying of thirst. I think ingenuity overcomes problems. I think Malthusianism taught us that. What are your thoughts?
You're exactly right. The Sahara Desert, which is the size of the United States, the continental United States, Sahara Desert used to be gigantic, prosperous farmland. I mean, there were cows and goats and everything else in what is now the Sahara Desert. It became an ecological disaster. So I want to repeat, the Sahara Desert is the size of the continental 48 states. At one time, it was rich, extensive farmland. Now it's the largest desert in the world. And somehow, mankind has survived. We're all prosperous. Don't worry. I have no problems or no worries about the survival of humanity. I've traveled around the world a couple of times. I've seen mankind adapt over and over and over again, and we will continue to do so.
As we're winding down here, you have so many decades of investing experience and in business, and so many media outlets look to you for financial commentary and predictions. With all those things in mind and all that history of experience, what should a young person of today be doing? That might be a good place to invest or a good thought paradigm to adopt or anything else as far as thoughts and activities that a young person should be engaged in.
You should figure out your own passions and then pursue them. First of all, many people never figure out their passions, and even more who do know their passions don't pursue them because their parents or teachers or friends or somebody tell them not to. Figure out your own passion. The people who do what they love, Keith, never go to work. They wake up every day and start having fun. And those are usually the people who are the most successful because they're so happy and having so much fun. And even if they're not successful, they don't care. They're happy. Don't care if they're not so successful because they love what they do. But those are usually the people who are most successful. So figure out your own passions, especially if people laugh at you, especially if people tell you you're crazy. That's what you should pursue.
Right. The crazier they tell you you are, the more the indication that is that you may very well be on the right course. And I appreciate hearing that because I quit a day job of something I wasn't passionate about because society sort of expected that of me and they saw me as a success. But ultimately, that's where I wasn't happy. And now when I look back, when I quit my job, I made a mistake with the emphasis being on the word when, meaning I should have left sooner.
Well, good. You learned that lesson. I try to tell, especially young people, because I speak at many universities, but old people too. I mean, I tell my daughters, listen, if you want to be gardeners, go and become a gardener. And all your friends are going to laugh and your teachers are going to say, what are you talking about, becoming a gardener? But if that's what you love, you're going to be the gardener at Buckingham Palace or the White House someday, or you're going to have a chain of garden shops all across America. You'll be listed on the New York Stock Exchange. And all of your friends are going to, the ones who are laughing at you now, are going to call you up looking for jobs. And your professors are going to say, oh, yeah, we always knew you'd be a good gardener. We used to encourage you. So whatever it is, whatever your passion is, Keith, first you have to figure it out. And many people never do, or they're afraid of it. But figure it out and pursue it. Don't listen to my advice. Take your own advice and pursue your own passion.
It's something you're never going to regret if you do that. Was there any last thing that I should have asked you about, but that I did not?
You should have asked about Korea, because North Korea is now opening up, and Korea is going to be the most exciting country in the world when that happens. And it's going to happen very soon. Korea today is where China was in 1981, 1982, when it started changing. So if you're not happy in America, think about go to Korea and become a farmer, and you'll have a very, very good life.
Talking about South Korea.
No, North Korea. North Korea is very, very exciting right now. North Korea is opening up. Forget American propaganda. I hope you've learned by now that propaganda everywhere in the world is usually wrong. No, North Korea is very, very excited. I wish I could invest a lot of money there. I cannot, because I'm an American. We're citizens of the land of the free, but we're not so free anymore like we used to be. So it's not legal for you and me to invest in North Korea. But if it were, I would put money there. Again, Keith, think about change. Think about that everything we know in 2019 is not going to be true in 2034. That's how you become successful.
Where would one start if they were interested in investing in North Korea?
Well, that's difficult because you're not even allowed to go there right now. You'd have to go to South Korea or go to the Chinese side of the border. There are many, many Koreans on the Chinese side of the border there. Start looking around. But they don't have anything, Keith. I mean, tablecloths, electricity, they don't have anything. It's a disaster. North Korea used to be richer than South Korea 40 years ago. Well, communism can ruin anything and does ruin everything. Now, North Korea is a disaster. So whatever you're good at, you're good at soap, go to North Korea and start making soap. You'll get rich. They don't have anything.
If they adopted capitalism and a startup culture, there sure are a lot of needy people there.
They are doing it right now. I mean, the kid is changing things very rapidly, very dramatically, and it's very exciting. Unfortunately, other people can go there, Russians, Chinese, many people are pouring in there, making investments, while those of us from the land of the free are not allowed to do anything yet. We will, but other people will be way ahead of us.
We're not so free from that perspective. Jim, how can our audience learn more about you?
I guess you could read my most recent book. It's called Street Smarts, Adventures on the Road and in the Markets. I guess that'd be the simple way to do it. Just buy the book and read the book. You'll know more about me than I know about me.
It's a very popular book. Well, Jim Rogers, it's been a real pleasure having your perspective here on Get Rich Education. Thanks so much for coming on to the show.
My pleasure, Keith. Let's do it again sometime.
Straight ahead, I want to share some thoughts and some interview takeaways with you. You're listening to the show that's created more financial freedom for people just like you than nearly any show in the world. This is Get Rich Education. Finally, Total Control Financial gives you checkbook control of your 401k and IRA money to invest in real estate. It's time to get your retirement money into your own checking account, but you've got to avoid the little-known tax that you'll pay with any self-directed IRA. Instead, it's time for the QRP. Learn more and get your free copy of the QRP book by text messaging QRP in all capital letters to 72,000. For a real estate investor like you seeking an income property loan, go to Ridge Lending Group, NMLS 42056. Over the years, you've heard President Chaley Ridge generously devote her time to you here on the show as a guest. Ridge provides investment property loans in most U.S. states, and you're going to find out how they've helped more people realize their dreams of real estate financial freedom than any other mortgage lender in the entire nation when you get started at ridgelendinggroup.com.
This is our Rich Dad, Poor Dad author, Robert Kiyosaki. Listen to Get Rich Education with Keith Weinhold. And the reason I respect Keith, he's a very strong, smart, bright young man.
Yeah, it was great to chat with Jim Rogers. He says inflation is more likely than deflation. He's pretty dismissive of climate change as being a disruptor, at least insofar as saying climate always changes and that it's really not much of a story. If you're a young person, follow your passion and not the money. Then when you do what you're passionate about sooner in your life, the money will come later and you're going to be happier overall. You've probably heard that before. And these are my words now. Real estate income can support you and help you overcome that fear that wells up inside you when you think about leaving what you're doing and instead doing what you love. Now, these next four statements are exact verbatim quotes from Jim Rogers that I jotted down. Interest rates are going to go much, much, much higher over the next few decades, and it's going to ruin a lot of people. If you can borrow a lot of money for a long period of time at low interest rates, rush out and do it right now. Wall Street is coming to an end. Just about anything you would go into in agriculture now is going to do well. Thanks to the illustrious Jim Rogers. I'm pleased that so many of his thoughts align pretty closely with our paradigms and actions here at Get Rich Education, where we do prudently borrow relatively larger sums of money for a long period of time at low interest rates and tie them to a real asset that both pays for itself and pays you well at the same time. He says to rush out and tie up that type of debt right now. And we do feature agricultural investments on our website, and we devote a show episode here with a reputable agricultural provider at least annually. Agronosotros is the company that we've recommended most frequently over time. A few weeks ago, we got some good feedback when Russell Gray was here, and we discussed the state of the real estate market. A couple of you even telling me that you liked hearing the voices of your two favorite shows, Get Rich Education and The Real Estate Guys, both on one episode. Kind of two worlds collide there. So Russell Gray and I decided to do an upcoming event together that you can be a part of. You'll get all the details in our free wealth building newsletter, which you can get at GetRichEducation.com. Our free Get Rich Education newsletter has got to be one of the best values in finance out there. That gives you access to everything from my free ebook to free educational videos to actionable opportunity and more. Grab it now at GetRichEducation.com. Hey, if you liked the show today, please tell a friend. I'd really appreciate it. Until next week, don't quit your daydream.
Nothing on this show should be considered specific, personal, or professional advice. Please consult an appropriate tax, legal, real estate, financial, or business professional for individualized advice. Opinions of guests are their own. Information is not guaranteed. All investment strategies have the potential for profit or loss. The host is operating on behalf of Get Rich Education, LLC exclusively.
As America's third largest city, Chicago, Illinois has big economies of scale for real estate investors. But there are problems with investing in highly taxed, fiscally strapped Illinois. You can beat it when you invest in Chicago land, staying on the Indiana side of the state line. Your property tax on a median Indiana home is less than half that of an Illinois property. Forbes ranks Indiana as one of the top 10 states to do business. With typical rents at $1,250 and purchase prices at $125,000, Northwest Indiana numbers work. Learn more and connect with the turnkey provider at GetRichEducation.com/Chicago. That's GetRichEducation.com/Chicago.
71% of Americans aren't saving enough for retirement. It's going to get worse as people live longer, and you need to start thinking differently. But you can't lose your time. Real estate is the investment vehicle that's made more ordinary people wealthy than anything else. Keith Weinhold of Get Rich Education is host of one of America's top investing shows, Disrupting Wall Street. He's an international best-selling author, a writer for Rich Dad Advisors, and has been an active income property investor since 2002. He has created thousands in passive monthly income for countless followers, and now he has a free book, The 7 Principles for Creating Wealth in Your Life. Get your copy now at GetRichEducation.com/book. That's GetRichEducation.com/book. Because invest in what produces income for you now and later. Sign up now at GetRichEducation.com/book.
The preceding program was brought to you by your home for wealth building, GetRichEducation.com.